So in the last few years, we've seen an emerging model. There is capital out there, and it's sitting with a lot of retail and institutional investors. So there are various providers that we have heard about today. Market Invoice is one in particular, where we are disintermediating that traditional model and bringing the funds directly from a wholesale investor market directly to an SME. So Market Invoice is doing that via an online competitive market. And we're focusing on leveraging against an asset being an invoice. And that invoice is considered to be quite low risk from an investor standpoint, given that it's backed by a large corporate or public sector debtor. So to give you a quick example, let's say we've got a software developing company, very thinly capitalized business, doesn't really have a balance sheet. It's a developer, and maybe he's got a couple of overhead costs, that's it. He has an invoice though to Sony, very good quality debtor, but he's not going to get paid for 60 or 90 days, and he needs to keep paying his developers to develop this app, for instance. It could have been the nice new corporate finance network app. They're not going to get paid straight away, so they come to our market. They register with us, which only takes 5 days, 6 days. They put that invoice on the market. We have global investors and also now the government providing the capital against that invoice. So on average, they're expected to unlock 85 to 90% of that invoice day one, and they'll get the remaining 10% once we see payment come through for a fee of 1 to 2% per 30 days. So it's a very simple model, and it's a very competitive model, and it's a very speedy model. Okay, so what are the kind of SMEs that we can work with? Of course, we just need to see a company that has a track record, and it only has to be 4 to 6 months of trading history. We need to see that they do have turnover coming through their accounts. To get competitive appetite, we want to see a company that's going to be turning over 250K plus. We can deal with companies, well, generally we deal with companies between 250K up to 25 million pounds. They all have an intermittent cash need. Of course, as I mentioned, the invoices need to be backed by either blue chip debtors or public sector clients. So we can deal with NHS trusts, for instance. And we need to deal with an invoice between £5,000 and up to £1 million. The average size at the moment is around £60,000 through the market. That is growing substantially. We are seeing £200,000 to £400,000 invoices coming onto the market at the moment, which are getting covered within hours. Why do companies use us? Well, they're fast-growing companies. They're thinly capitalised. They're over-trading. They need cash back in their business quickly. They may have a complex business model. They may they may invoice upon stages, like a lot of marketing companies. They have a project. They have milestones they reach. Generally, factoring and invoice discounting will not be able to support against those milestones. Given that we're focusing on each invoice in particular and the acceptance and verification of those invoices, we can focus on those styles of transactions. So we can be a lot more tailored in that instance. And of course, any company that has very seasonal or volatile cash flow. So it's very project-based. They have a lot of seasonality. Maybe they're a rag trader and they're needing to get a lot of cash up front for their summer season. Very common company that comes to us. They don't have a very big balance sheet. They have a lot of trade just before summer. They've got ASOS as a client, and they have to wait 60 to 90 days to get paid for that. And that's just, it's impossible for a business to run like that.